Hello, everyone. Thank you so much for your patience while we worked through some tech issues. We are so happy to be with all of you here at our Credit and Coffee Talk series. You're in the first episode, Behind the Score, Demystifying Credit. I am joined by Terry Clark here. We had some mic issues to start, and we weren't planning on sitting next to each other, but I kind of like this. This is cozy.
It is.
We both have our coffees. We have some great information to share, and we're both moms, so we know about being flexible and last-minute changes. Well, we're glad that everyone is here. First, wanted to share a little bit about the screen that you see in front of you, because you have a few boxes, our faces, you'll have some slides, and then there are some boxes at the bottom that you can engage with, and all of those are customizable. So if you like to expand the video because you would rather have that and not all the other things, you can do that. You can move boxes around if it's too much for you to look at. But we like to have lots of resources for everyone. You can download all the documents that you see. If you go to the very bottom of your screen, there are icons for the attendee chat, for resources, to make an appointment. If you click on any of those and they're not already on the screen in front of you, it'll pop up. So if you go to your attendee chat, if you find that icon on the bottom and you click in there, you can go ahead and type in the chat and everyone will see your response. So if you want to tell us where you're tuning in from, that would be great. We're in Farmington Hills. And we are extremely excited to share some information on credit. Now, I promised this was a 45-minute webinar, and so we may have to skip a few of our fun polls that we had planned, and we're here for the content. So I'll make sure that we keep everyone on time, and I'll leave by 12:45. Terry here is a wonderful human being. You are all going to learn so much from her. I'll first introduce myself. I'm Beth Risky. I'm the education specialist here at Community Choice Credit Union. I have the pleasure of developing educational content for the community. A webinar is one example. And so we have decided that credit is a topic that a lot of our community wanted to learn more about. That means, and community to us is our members and non-members. This information is accessible to everyone. And so if you see the registration box at the bottom, you might be thinking, well, maybe I've got, a teenager who needs to learn more about this, or a young family member, or even someone who maybe has a big life change and they, never learned about credit, but now they need to. Please feel free to share that. That registration link is good for anyone in the community, again, members or non-members. So you didn't come to hear from me. You came to hear from Terry Clark. So first, Terry, can you share with us a little bit about your background?
Good morning. My name is Terry Clark. I am the lending performance coach here at Community Choice Credit Union. And I'm responsible for coaching, training, and developing team members who are involved in our lending process. My goal is to help strengthen them, to get them moved to the next platform, and to build a skilled team so we can have a smooth lending process to make our members experience a great experience every time that they apply for a loan or talk to any one of our team members about loans.
Lovely. I love hearing that you're able to coach others, those that are members who are looking for a loan, but also there's a big lending team here and everyone has to learn their job and how to do things the right way. And so we're really grateful for you. So not to put you on the spot, but why did you say yes to doing this webinar? What is it about credit that you see as a need in the community?
I just see that just talking to everyday people, some people have questions about credit. They don't know how credit works, how it'll affect them. I listen to stories of people who are trying to get a mortgage and their credit isn't where it should be to get the best rate and the best prices that they need to go look, or even just to buy a car. I see sometimes people get taken advantage of, and it's upsetting when I hear those stories. So I just feel like everybody needs to just learn a little bit more about credit just to help them out.
Absolutely. Knowledge is power. And even if you don't need a loan today. You might in the future. Maybe your credit isn't the thing that you're super worried about in this very moment, but it could be in a year or two. So this information is valid today and tomorrow. So let's dive in. What exactly is credit? Can you give us kind of a, like, in a nutshell, what is credit?
So credit is obtaining goods or services or money from a lender or financial institution. So you enter into agreement with them saying that they're going to provide this service to you and you're going to pay them back either like monthly payments or just one lump sum. So it's that contractual agreement that you have with a lender. So it shows up anywhere from like credit cards, mortgages, auto loans, auto leases, personal loans. Even if you, are financing those cell phones, they pull your credit.
Mm-hmm. So when we are pulling credit, there's some sort of entity that kind of keeps all this information and categorizes us, so to speak. Yes,
there's 3 credit reporting agencies, or we call them credit bureaus. You'll hear those terms interchangeably, but they assign each individual a 3-digit number. And this 3-digit number just shows how, what they think, how your prepayment history or your credit worthiness is. So it could go from as low as 300 up to 850. So once you start getting credit or getting credit cards, then you'll be assigned a number, and that is from the credit bureaus. There are 3: TransUnion, Equifax, and Experian.
And so I see on the screen here, there's kind of a meter where I'm, far left is in the deficient category, far right is in the excellent category. Let's say I exist somewhere in the fair category. I'm between 600 and 659. Is that a number that I'm going to keep forever? Is it a point in time? Like, can you kind of give us the background on that?
Yep. So the credit scores is just a snapshot of your credit worthiness or your credit practices in a certain time period. So it could change. It could increase depending on your behavior, or it could decrease. So what your credit score is now, it could be different in a month or 2 months from now.
Okay. Now, you just heard her say that there are things that we can do to improve our credit, and there's also actions that we can take that can negatively impact our credit. We're going to get to that in just a moment. But you heard Terry say that there are 3 credit bureaus. So let's get into that. Who assigns us our credit scores? So you mentioned Equifax, Experian, TransUnion, but if you notice here, there's 3 different scores. Can you explain why that is?
Sure. So you could have 3 different scores based on the credit bureau that you're looking at. And it could be from, not all lenders report to all 3. So it could be based on what's reporting, and they have different algorithms in how they get the credit score, how they determine that credit score. But it's most likely the lenders, some just report to TransUnion, some report to all 3. So it all depends on what's in that report when you're going to compare numbers, credit scores.
Okay. That was the poll that I'm taking us through here. All right, now we wanted to get into some information about what it is that all of you could do to improve a score. And so these are things that you can take away. Like I said, if you were in that point in time, you maybe fall into that 600 category, just as an example. But you have a goal maybe of getting up into the 700s. So Terry's going to talk us through some examples of what you can do to improve your score.
Yep. So there's different ways you can improve your score. One is having different types of credit. A lot of people have credit cards, maybe, and that's a revolving debt. So credit cards are good. You could look at that, and maybe an auto loan or a personal loan. A personal loan has a set term and a set credit limit, and you make that same payment each month until that payment is made.
Okay.
So having different types is helpful.
Okay. Now I see on the screen here is using credit frequently.
Yes. So if you have a credit card and you never use it, credit history is not going to be reported to that credit report. So it's good if you have a credit card to use it, maybe not go on spending sprees, but just within your means, use the credit and then look at your statement each month and then make what you can afford, either that that minimum payment or if you can, it would be best just to pay that off each month.
Okay. Which is really interesting to hear someone say use credit frequently so that you can improve your score. And our messaging isn't go out and get a credit card and start charging away. That's not what we're looking for. It's that basically what Terry's telling us is if we don't use that credit, it shows no behavior. And so what the credit bureaus are looking at is behavior, whether it's positive or negative. Now you have here, be responsible and stay below your credit limit, which is interesting because you'll get approved for whatever, $5,000 on a credit card. But talk us through that. Why should we stay below that limit?
So the credit bureaus do look at how much credit limit is on your credit card and then how much you spend on that credit card. If you have a credit limit of $5,000 and you spend $5,005, it's not going to be a really good view of how you handle your credit. We try to stay maybe about 30 to 40% of your credit limit. You want to stay within that or lower to get a better score. We know things happen sometimes, and you're a little bit more, but it's okay. Just try to repeatedly, every day, monthly, just stay within your means of that credit limit. Just make sure you look at that.
Okay. So an example of maybe improving my score and using existing credit, I might have a credit card that's $1,000 and I continually am maxing it out. In order for me to improve my score, I might want to talk to my lender and say, could I please get approved for $2,000? But my behavior has to stay the same, that I'm at the $1,000. I'm not maxing. I'm not going beyond that. What it's doing is giving me that gap, right? That $1,000 gap. And so now a lender, the credit bureau will report and show, what's the term? Credit utilization?
Utilization.
Yeah.
Yes.
Okay. So again, we're not suggesting that you go out and ask for loads of extra credit, but a way to improve your score is to give yourself, leverage an existing credit card that you have, where you maybe get a credit line increase, but continually to stay below the current balance that you have of $1,000 in our example. Now, the last thing we have here, it says paying at least the minimum balance on the due date.
As my kids would tell you, I always drill in, pay your bills on time. Payment history is a majority a ratio that they look at when assigning a credit score. So if you make your payments on time, at least that minimum balance due, it'll improve your score. Payment history. Due dates, use that calendar to schedule those due dates. Sign up for auto payment.
Oh, I know. I love anything automatic. I am in for it. Okay, now on the reverse of this is actions that will lower your score. So let's take a look here. Frequently missing payments on a loan. Now this kind of goes back to the due date thing, but what happens when we're missing payments? Like what is the lender seeing out of us?
So the lender, missing payments, they could assign you a fee for missing that payment. So you not only need to make that minimum payment, but you also need to make that that late fee.
And I'm accruing interest. So I'm paying the principal, what I actually purchased, the interest on it, and now a late fee. And my credit score is lower.
Increasing.
Yes. Okay. The next thing we have here is that timing counts. The later the payment, the bigger the impact. What exactly does that mean?
Well, I know sometimes we might just forget what we're doing and forget that due date. And then we get that, call from the financial institution. Hey, we're going to make your payment. Oh, I forgot. So, missing a payment once in a while, it could lower your score a little bit. But if you consistently make those payments late, the longer that you wait until after that due date, the bigger the impact. So if you make that payment like a couple days after the due date and get that late fee. Or if you wait 90 days, then that will definitely make a bigger impact on your credit score and lower it.
And now we're even getting into possible collections, right?
Correct.
Yes.
Yes.
It just depends on the lender. Is that right? Of when they report to collections. Okay. So things to keep in mind, the timing does count, calendar reminders, auto pay. Those are all things that can help you out. Now, this is the reverse of what we just talked about on the previous slide, but maxing out credit cards, even if paying on time, I found this really interesting because they want to know that our behavior is one of responsibility, that we can be responsible in paying our debts, but they're also looking at this. So maxing out credit cards, even if paying on time. What does this tell the credit bureau as they're assigning a score?
So looking at that you're living outside your means, those credit limits are there for you to borrow up to that amount. If you borrow over that, then you're paying extra fees. It just lowers your credit score because it just makes them look at it like you're not being responsible for your credit.
Okay. Now, the last thing we have here is too many inquiries in a short period of time.
Yes. When I was younger and I started getting credit, I would go to a store and they says, hey, if you open up a store credit card, you get $5 off. I'm like, cool, sign up for that. Go to another store, do the same thing. So I didn't realize at that time I was having inquiries on my credit report and it was lowering my score. So too many inquiries in a short period of time, just watch out for that. Probably within the 6 to 12 month period, you might want to just limit on how many inquiries you have.
Okay, that's really great advice. Now we're going to actually get into what exactly an inquiry is, so you all can walk away feeling comfortable with that terminology. So we have something called a soft pull of credit versus a hard pull of credit. So do you mind talking us through a soft pull real quick?
Sure. So soft pulls, they don't affect your credit score. And companies sometimes do those soft pulls. For example, it could be your credit card company that you have a credit card through when they offer you a pre-approval offer. Hey, use this credit card on this, and then you get a bonus or something like that. But also different, like maybe an employer insurance companies, auto insurance, they might do soft pulls on your credit report, or even when you pull your own credit report, I'm sorry. When you pull your own credit report, it's a soft pull. It does not affect your credit score.
Oh, that's really good to know.
Yep, just looking at the details.
Okay. Okay. So now a hard pull, what's something that everyone should take away?
Yep, the hard pull is when you're applying for credit. You're applying with a financial institution or a lender to obtain some kind of services, and they will look at your credit report. They will pull all the details. They'll look at your credit score, and this could have an impact on your score. So that goes back to the inquiries, the hard inquiries. If you go to different companies, getting a lot of credit cards, it could decrease your score.
Okay, so that's really helpful to know, because if anyone is in the time frame of life where you have a bigger purchase coming up, maybe you this year are planning to purchase a home or a new car, but you're going to need an auto loan or a mortgage to do that. Any of these little decisions you make leading up to that can totally impact the final outcome of that big purchase that you are hoping to make. This is really great information. Now we are going to move to a poll. So if you had maximized your screen where you see just our video, you're going to want to minimize that for a moment. But I would love for all of you to answer on this slide, what is something you wish you had learned about money sooner? So your options are how credit really works, budgeting, saving, hidden fees, interest rates and loans, all of the above, or other. So feel free to answer. Terry, what would you say? What's something you wish you had learned sooner?
Geez, there's a couple of them. I would say savings. I hear people tell me pay yourself first, and I never knew what that was. I'm like, I get a paycheck, every 2 weeks. Of course I'm paying myself first. So I guess learning a little bit more about how to save and what to save for.
Yeah, I would say for me, it was budgeting. I grew up in a family where my dad sat down and wrote the checks, and he played his music. And I can specifically remember the event, sitting at the dining room table doing all of this. But I never knew what exactly was happening. He had a very structured system. He wrote everything down on a legal pad, but I don't know what he was writing down. I don't know who he was paying. I didn't know how to balance a checkbook. And so I had some hard lessons to learn as I exited the house and started to do my own thing. So for me, it was definitely budgeting. Let's take a look here. Our audience, how credit really works, I think is, look at all of the above. Look at that, 39%. These are all really important personal finance tasks that we all need to learn. And so Terry and I were talking about how transparent we need to be about this within our families too. Age appropriate, of course, but how we can raise our kids and to come alongside friends and family to make sure everyone has the information they need in a non-judgmental way. All right, moving right along, we're going to talk to hard pull components so that when a hard pull of credit is happening on your behalf, what exactly is a lender looking at? So let's go through. If you want to read these off for us, if you have any commentary, please feel free.
Okay. Closing of an account, revolving debt.
Can you explain that one?
The revolving debt, yes. Yeah. So revolving debt, your credit card information will show on your credit report. It'll show the date that you opened the credit card, your current balance, your credit limit, and the highest limit that you've had on that card in the past 24 months.
Oh.
So it'll also look at your payment history too, like on-time payments or any late payments.
Okay, that's really helpful. Thank you for that.
Oh, there you go. Late
payments, all loan types.
Yes.
So this is back to like if it was an auto loan, a credit card, a personal loan. Is that what that means?
Yep. Auto loan, credit card, personal loans, student loans show up on credit reports.
Mm-hmm. Okay. And big one.
Bankruptcies, collections, so tax liens, judgments.
Oh, tax liens. Yes. Back to the whole making your payments on time conversation that late payments matter. We eventually could get into a collection situation, but any of that will land on a hard pull of credit that a lender can see. And of course,
your credit score.
Now next we're going to talk about what sparks a hard credit check. And Terry alluded to a few of these things, but let's take a look. Situations in our life where a hard credit check is going to take place. So first of all, we've got mortgage, a personal loan. Now, is there any, is a personal loan one, somebody comes and says, I have various elements of debt I want to kind of combine into one lump payment. Is that what that is?
It could be. Okay. Yeah, personal loans can be taken for different reasons, but one of the ones could be a debt consolidation where you have these over-the-top credit card balances and you want to just put them into one payment. You could go to your lender or financial institution and they could do one loan for you. That way it'll be a personal loan. They'll give the money to pay off those creditors. And it'll be a term loan with a fixed interest rate.
Ooh, that's nice.
Mm-hmm. And then also on a mortgage, they do a credit check when you first apply for a mortgage and then right before you close on your mortgage, just to make sure that your credit worthiness is the same.
Okay, so this is back to that conversation. If you have a big purchase coming up, like I said, like as an example is purchasing a home, you may have been pre-approved for a certain amount, but then if you choose to go out and maybe get excited and take out some credit cards because the deal's at the stores and we need to do furniture and things for the house, now you still have to have your credit pulled at the closing of the deal, and that could change things. So all of these things to take into consideration. So next, hard credit check if you're gonna rent.
Yes. They need to look at your credit worthiness to see if you're going to pay that rent each month.
Okay. We've mentioned this a few times.
Yes. Auto loans or auto leases, they'll look at.
Ooh.
And then your interest rate could depend on your credit score.
And credit line increase. Okay. Mm-hmm. And then you mentioned this one,
the student
loan. So There's an asterisk there just for us to chat about that. So if you have no credit history, which is in many cases, 17, 18-year-olds who are graduating high school and ready to venture off into college, they have no credit history. So what happens in those cases where they need that student loan? What are ways around that? They can get the money to go to college, but they don't have credit history.
Well, sometimes the student loan companies will ask for a co-borrower or maybe a parent to sign up on there just to make sure that they're going to get their payments when they're due. Student loans, they just look at all kinds of different criteria on that to make sure that their credit worthiness is you're going to be able to pay that back. And they will look at your credit report to see that.
They'll look at the credit report of the co-borrower.
Yes,
so if we have a parent who is approaching that phase of life and they're needing to be the co-borrower, so they're going to experience a hard credit check.
Hard credit check.
And they would be responsible for paying back the loan?
Yes.
It's a combination? Okay, yes. So that's a conversation to have with the student who is taking out the loan. If you are going to be helping them out, you want to get that plan in place. Wonderful, wonderful. All right. Well, now what? What is it that our audience should do upon exiting? We want to share with you a tool that already exists for our members in e-banking. So we want to encourage you to indulge in a credit checkup. You can do that very easily if you go to your e-banking app and find financial wellness and click on credit score. It's going to tell you your current credit score, and you can then get additional information right within your app. So that is something that we want to encourage you to do right after this webinar. For anyone on the line who is not a member, first of all, welcome, and we wish you to become a member. It's very easy. We're a financial institution. It's $5 to become a member. That goes into your share savings, but then you'll have access to a lot of these tools. And for the moment, though, you can go to that link in the resources. It's called annualcreditreport.com or .org.com. Interestingly enough, if you click on that, it'll say, check your credit score every week. And I'm sure the thinking behind that is we want to make sure with all the increase in fraudulent activity that people are aware of what's going on with their credit. But I just want to share with all of you that if you don't yet have a choice checking account with us, we have fraud detection built into that. So if a fraudulent purchase was made, you'll get a notification that it occurred. And each month you'll get a report that kind of shows overall any sort of fraud detection. So just wanted to throw that out there. That is something that is built into an existing product that we have. And for those of you who do have choice checking, there is a club checking app. And we recommend you, same as everyone, indulge in a credit checkup. It's just that your view is going to look a little different. You will click on credit, and then it's going to show you your credit score. And then from there, fairly easily, you'll see view credit report. There's a little button right in the middle, and you can start to go through and find out what exactly has been going on in your life. You might be surprised to see some things that you forgot about. You might be surprised to see that you've paid some things off that you didn't really realize, or that your credit score is what it is. And you can set goals, and the app will guide you through all of that. It's really neat. We also want to recommend that you treat yourself to free financial counseling. Think back to that poll where we asked, what are things that you wish you had learned when you were younger, or what, I shouldn't say younger, but sooner. Yes. What you had wished to have learned sooner. Treat yourself to free financial counseling. If you go to the, in the console at the bottom, for our members, I know it says book a meeting here. It's actually going to say make an appointment. When you click on that link, you're going to see language called Choice Map. That's what we call free financial counseling. And you can do that over the phone, or you can do that in person at a member center. And again, back to my non-members on the call, if you go to the Community Choice Credit Union link in the resources, you can become a member. You can come to the Member Center. There's several different ways for you to do that. And then once you become a member, again, it's the $5 share savings. You can then indulge in free financial counseling. So we have that available to all of you. Again, at the bottom of your screen are all the links to everything that you need, including a survey. We'd love to hear more about you. And in the survey, the first question's for fun. It's how you take your coffee. Terry, how do you take your coffee?
Oh, I have to have creamer in it.
Creamer in it.
Yes.
All right. Well, I'll share with all of you my little secret. I am an agave user. If you are into sweetener in your coffee, let me share with you agave. It's the best. You will never go back, I think. I guess that's a pretty strong statement to make, but that's what I use. To close things out, wanted to share with you our upcoming webinars, which I know a lot of you are signed up for. But again, if you are thinking of, oh, so-and-so in my family could really use this, or a friend, this is for members and non-members. So share the registration link with others. And if you're not registered, go ahead and click on the link that we have in the console. Or if you have this, if you're watching the webinar on your laptop and you want to grab your phone, you can use that QR code. But our two upcoming webinars are June 10th, and that's how credit can help or hurt and how we can build it. This is a great webinar to attend for anyone who is a teenager, so wanting to establish credit history responsibly, anyone who's been paying cash for a majority of their life, and maybe circumstances come about where you really would like to establish a credit history. We'll talk you through that. And then anyone who knows, well, I have a mediocre credit score and I want to build it. We're going to talk you through steps on how to do that. And then June 24th, I'm extra excited about this one. We're going to be talking about what's behind the 0% offers that we get in the mail. And we're going to be talking about some of those other predatory lending practices that exist. And we want to just give this information so you know what you're getting into in case you get a 0% offer in the mail, or you get into a situation in life where you feel like you really need to take out a high interest loan. We want to share with you what that actually looks like on paper before you make that decision. So hope you can join us for that. We are right at time. It is 12:44. We ended 1 minute early, even though we started, 10 minutes late. Sorry about that again, but we are so grateful that you chose to spend the noon hour with us. We are happy to help you through any of your financial needs, so please don't hesitate to reach out. If you click on speaker bio at the bottom, you can email Terry or me, and we will answer all the questions that we can and pass you along to others if we can't. So thank you so much, everyone. We hope you have a lovely afternoon, and we'll see you next time.
All right, thank you.
Bye-bye.